Hey guys, I've had a few people messaging me this morning just asking me about what was covered yesterday on the basics, and unfortunately, because I couldn't get on Zoom, I had to do it by Discord, so I couldn't record. But I essentially was just going over what I covered in last week's session, which was market maker, looking at how they'll manipulate those positions, things to be looking out for, and yesterday I just kind of was recapping that. So if you haven't seen last week's call, please watch that first, just so that you can understand what I'm talking about, because I don't want to cover it again now when it was already covered last week. So I had a few questions. One came in about divergence and how much kind of weight that I apply to divergence. So, on my trading plan, I've got about 10 different things that I'm looking at. And one of them is divergence that I want to see on that 15 minute when I'm trading this way. So I was showing how divergence can kind of stop you getting into those trades a bit too soon, and be a little bit patient. But the flip side of it is you might miss the trade because it could still just go without you. So you need to understand on your trading plan whether you're going to include divergence into your plan or you're not going to have it there. And this is going to come with experience, and you're going to have to do like the numbers on it to say, right, well, I took, I don't know, 10 trades that didn't have divergence, and this was my percentage outcome on the win rate, and then vice versa, see how much weight you kind of apply to it. But all I would say is it prevents me from getting stuck in trades, and I do find when everything's stacking up and I see divergence there, it generally has quite a high win rate. So I was talking about Euro CHF, right? And I had this one marked up from Sunday from the COP, and these red arrows, I'm really sorry my chart's a bit messy, but this is the only way I can teach it. So the red arrows that were all on Sunday said this is what I was expecting, a push up into this level and then a drop off from here. So as the market starts to move up, right, and when we do the COT report, what you have to understand is it is a longer term kind of forecast, and I think I said this in the video I did yesterday. So it's not just going to instantly just drop in the direction that we're expecting, and that's why I'm trying to highlight, right, if this happens and it starts moving against us, that's okay, but we're still, overall, we should be looking for where they might be turning it around. And particularly with Euro CHF this week, I was saying yesterday, this is one of them that's not played out yet, that could still play out. And Euro JPY was the same. And if you look at the COT report that I sent out, retail traders on Euro CHF were 90% long. So this doesn't surprise me that the market started to push up. This is what retail traders are doing. They're trying to buy the market, and then eventually they're going to reverse and bring price down. So what I was showing then, let me show you some examples of this divergence thing and how this stopped me yesterday from getting involved in this trade. So as I said yesterday, I was watching Euro CHF, and I put a screenshot in the group chat yesterday saying, okay, price has come up here. It was massively overbought on the RSI. It had pushed over that 80% level. So that's a great indication, right? Okay, what do I want to see next? Well, what you can see is that we've already made this one push out of Asia, out of Asia at London, and then we've made that second push up, and then you either want to see a third push to the high now, or you want to see a really nice clear M pattern, right? So you want to see that M, and it prints the M. So it does print an M here, and this is entry right there. And let me just see if I can tidy this up a little bit. Get rid of this box for now. Just take that off. So, it does eventually print the M. Entry would be there for the sell position to take down. But what did I want to see? And I said this in the group, I sent it out. I said it's about being patient for me because I want to see divergence. So I want to see price push up, and then hopefully, a price basically needs to push past this high here. And on the RSI, when that happens, I want the RSI to stay lower. So it's not just about, if price comes up, I don't just go straight in. You've got to wait for the price action to print. So like a bearish engulfing candle, or those evening star patterns and morning stars if we're at the bottom. We've got to wait for price to actually confirm that we're going. So for example, if price had come up, given us a wick up here, and then given us like this candle here, this big, can you see that big bearish candle there? That would be really nice. If you've got that push above, then you get that nice close like that. That's a great entry in terms of price action telling you, yes, okay, let's go. And that would have tied in with, okay, it's divergent as well. So I was also saying, it's not just about taking this stuff into account, but I'm obviously taking other stuff into account. So I'm taking into account my cut analysis. I'm expecting price to do something when it comes up here. So how can I get the best entry? Well, it's by watching this kind of stuff. What else is going on up there? What have we got? I think we had an OB somewhere as well, so I was keeping an eye on that. But actually, what I wanted to show is that the divergence never happened. Price came up eventually here, didn't get as high as this one, so it didn't break it. You can see it just fell just short of it. I can't get that straight, but yeah, just fell shy of it, so it didn't break above. So there was no divergence at any point on this yesterday. And what I was showing was that actually what it did, when it went into this oversold position, and I said it was massively oversold on the 80, what it then did is it just went into this huge range. And if I just put this where we were yesterday, so when I was doing that at the live last night, it was about 8 o'clock when we were covering this, so here. And I was saying, look, what they've then done is, instead of price dropping off from there, it's just gone into this consolidation phase. And what this is doing is it's distributing all them orders between, buyers and sellers, and evening it kind of out, which is why the RSI's dropped off, but price hasn't really dropped off. So that's potentially a bit too much information, but I just wanted to show how your RSI can still drop down from being in this oversold territory, and all it is it's because the market's stalled now and it's just distributing between buyers and sellers here. Whereas if we get that divergence, that would have been a nice trade. So my point being is there was no divergence here yesterday, so I didn't take this trade. If I'd have taken the trade here where this M formed here, if I'd have taken that, you can see that I'd have just been, well, let's put it on. So I'd have gone in here, my stop would have gone above here, potentially, up there, and then my TP would have been somewhere down here, right? And instantly I get a bit of profit, and then I'm just messing about for the rest of the day, comes into a bit of profit over here, messes about, eventually it's going to come take my stop. So this leads me on to my next point. And this is the great thing with trading this kind of way, is it teaches you to understand what's potentially happening. So yesterday, this is exactly what I said last night. And again, remember we were here. And I said, what they're probably going to do now is push the market down a little bit, because it'll come take the lows here, because there'll be money sitting right here. So they're going to come down there. And then what they're going to do is probably go into Asia session. London Open, they're going to push above. We'll probably get this M pattern for entry here to come down. And this is no surprise to me that this has happened today. And this is somebody else asked me a question yesterday about, well, how much weight do you place on different things? And I said some of it is experience and instinct. And I said it's like when people talk about when you're playing snooker, right? The players, they already know like their next 3-4 moves in advance, and this for me is the same way. From experience, I'm already a day or two before preempting that this is potentially what they're going to do, and this is the way that they're moving this market. Why are they doing that? And again, they're doing it for exactly what I've just said to you. So a lot of people would have started going short here. There was a lot of wick rejections here as well. So again, it was telling people, price is struggling to get past, it's a bit of resistance, let's go short. So all their money is sitting right up here in this level, and that's what they're coming to take. So that's another reason why they've come up to push up there. And then not just that, but they'll have had more people now above this Asia session and stuff. They'll have been going into buys here. You'll have had people looking at this area and as a level of resistance. So they'll have started going in long, and this is why you get the M pattern forming, right? I'm going to try. I'm sorry, my chart is so messy. It does upset me how messy this is. But let me see if I can make a different colour, because my chart's not messy enough, right? Oh God, this is awful. I can't even tidy it up because I need this chart for the cut report stuff. So this big blue box that I've just highlighted, right? Another reason that they've done this at Asia session, right? What have they done here? They've pushed it above this level of resistance over here. What do retail traders trade? Support and resistance. So they've pushed above, they come back, they retest again so that they get the buyers, they get people buying now. Stops are all here. So this is just the way that they're creating, enticing people to go the wrong way. So, there'll have been automatic pending orders triggered when this big engulfing went through. There'll have been the retest, break and retest people going in here. So all of that is just a trap, and the actual intended move is we're coming down, and we're currently stuck at this level of support, which I've just been talking about on the live session. But I just wanted to show you how that can just help you not get trapped. I'm trying to help teach people how to interpret what's going on with these markets, and why this happened yesterday, and how I could kind of preempt that. And what I've just been saying to the guys here is, again, I think what you could see is people will be looking at this, particularly retail traders, and they'll be like, okay, it's in an uptrend now, so it's at this level of support. People will be probably buying now because they can see that sorry, my computer just went a bit crazy. Just get that off. So people will probably be buying here because it's at this level of support. Their stops are going to be somewhere here, targeting up there. So I do think that is going to eventually just break this low. But hopefully people have got into this trade and secured some profit and are at break even already. But essentially, that's what I think they're going to do today. And I did say I do see that this could at least drop lower, possibly even down to this weekly level like we expected, but it's not going to play out this week, so it's best to just probably close out before the weekend rather than swing trade in this. So that's that one. Another thing that I covered, which I tried to go through quickly, is so I went in on an EJ buy the other day, right? And I went in all the way over here, and I'll just rewind the chart for you guys so you can see how I caught this and why I was starting to pay attention to it. So there was a number of things, right? And I didn't call this trade out because it was against the cut bias. So cut bias was sell. But I saw an opportunity to potentially get at least to the 50% of Asia that we talked about before. And the reason I saw this is I'm going to share this indicator with everybody. But if you go to the H4 on this indicator was showing me that JPY reached nearly 80% on this in terms of strength. So, and I want you guys to think of this like the RSI. So 0 to 100%. Once you start hitting 80%, it's reaching that extreme level of overbought. So you're potentially going to start seeing reversals from that, because the strength has to, it can't just carry on going. Around that 80%, you're going to start seeing turns. And there was a key level right here. It was in a weekly support level. I'd already said that I expected price to come to this level, so I was expecting them to get a little bit of a reaction there. On the 1 hour chart, it was at 70%. So again, it was reaching that extreme level of oversold, really. So that's one of just how you can use the currency strength to keep your eye on. Because sometimes you'll be looking at these and thinking it's a bit delayed, right? Because sometimes stuff changes, like the strength changes, and you can't what's the word, it's a bit of a delayed reaction sometimes, and I think the strength meters, they can put you off taking trades. But this is about more using it just for a bit of insight. If you're looking already at a trade in an area, just keep your eye on that currency strength just to see where they are in terms of that percentage levels, and if they're at extreme levels, again, it just gives you a little bit of an indication that something could be turning around. And if we just go back, I mean, you had JPY at 80, euro at about 44, so euro's quite low as well. And then on the 15-minute, euro had reached like 34, which again, think of it like your RSI. Once you start breaching that 35 level, which is one that I pay attention to again. So there's just a few different bits on the currency strength that can really help you, and that's not always going to help because it's not always going to be that extreme, but it's just if you want just a bit of additional confluence, it's something to keep your eye on and see how that's playing out. But yeah, that's how you can use that. And I covered volume, so there's a really good indicator called Session Volume Profile HD. What I will say is sometimes if you've got this on your chart and then you go to use it again the next day, sometimes it doesn't load, so you do have to delete it off and like just put it back on. So Session Volume Profile HD, and what this does is it shows you where the majority of the money was in the market really, on a daily basis. So you can put it on whatever time frame you want. Don't go any higher than a 1 hour though to do this because it won't look right. But you can just have a scroll back. I don't think. Oh yeah, look. So there was a few other bits and bobs around there where there was money sitting in and around them levels. You can see over here. So it's just telling me that there was potentially another reason for a reaction there, that might be some money. What I would say with this is use it probably over the last say week or two. If price hadn't already been back to those volume levels, that's where you can kind of use it as a bit of confluence. And the way I like to use it is it's one of the last things I just turn on. I don't add too much weight to it. If there's nothing in and around that area, I'll still take the trade, but I use it that if I'm taking a trade like here now, and you know, last week I can see that there was a volume level somewhere like this here, and I was going to place my stop just below this wick. What I use it for is I might just extend my stop just a few pips past that volume level, just in case it comes back and just does another little wick. For me, it's just a bit of extra protection, but you don't have to use it. I'm not saying you need to use it. It's just something that you might like to use. And if we show you on the 15, it can be used as a bit of not support and resistance, but I would say these levels can be well respected. So if you look at, and again, it's going to be more like an area level, right? It's not just going to be like a full-on line. But you see there's this red line here that's telling you that's where the majority of the money was. So you've got the majority of the money in and around there. And this will print, sorry, just go back. Where's that day gone? I forgot I'd rewound the chart. So this line is printed straight away on that day. So you've got it marked up. So this ties in with 50% of Asia pretty much of the next day. And the next day it respects it really well and drops back off. So just don't trade these blindly. It's an extra additional confluence. If something you're already looking at and then you turn that on and you see money sitting around there where it previously was, then it's just another kind of tool to help you really. And there's nothing saying, like sometimes same with support and resistance areas or supply and demand, if it pushes through it, it can respect to the other side as well, and then go from there. So that's all I really covered yesterday. If you've got any questions, please shout up, and definitely watch the video from the other day, last week on the market maker. I'm going to be doing all my sessions going forward are going to be trading this way. We're just going to change the structure a little bit on how we who's teaching what kind of thing really. So Pete will be doing the OB stuff, the OB strategy, and I'll be doing more market maker stuff. So I hope this has been helpful, and if you've got any questions, please shout up.